But let me start the recording and say officially good evening. Welcome out to the Market Watch group. Monday Mentor Hour, beginners Q&A. Already got questions coming in on the alerts. That's perfect. But let's just go through real quickly the standard housekeeping process. Remind you that this is for education, illustrative purposes only. Not intended to be a recommendation to buy or sell any financial product. Our content is for information and educational purposes only. Does not constitute any investment advice. We're not brokers. We're not advisors. Yada, yada, yada. Okay. To the platform. All right. Let's go to the platform. Let's go to the platform. Not a great day today. Started pretty good, up 0.5%, ended down 0.5%. Volume ended up above average with sellers. So there's a good chance that we're going to knock it again. Like it just can't seem to. Maybe if we can get an inside day, and you can see we are seeing positive futures up $1 overnight, puts us back in this area. But if we could get back in here and then bounce, I still see that as a higher low. So all is not lost, but certainly, once again, what was the problem today? Well, once again, unfortunately, the problem was, I'm not sure why they have Trump in this picture of him making teases economic development with Russia. I don't get it, man. I don't get it. Someone has to explain to me how Russia has just somehow become our ally after invading a sovereign country, and we blame them. Doesn't make sense to me. What else? The tariffs on Canada and Mexico are on time. Futures waiver as Trump tariffs loom. I'm not seeing what it's getting. Other than market volatility, but the futures are back up a little bit. We'll see. We've talked about the fact that our news cycle has shifted. And as much as we want to look at the economic calendar and be like, oh, what's coming out tomorrow? Well, what we can't tell you is there tariff news coming out tomorrow? If there is, it could be problematic. Or it could be beneficial. Thank you, Vladimir. I'm going to have to concur. It's not, I'm not seeing the benefit of it yet, I guess. But hey, I'm going to remain an optimist. I remain ever a bull. Bullish on the market, bullish on the country. I'm a bull. I just hope that I have cause to remain bullish. Tomorrow we have consumer confidence coming out. Expectation is a drop. Above 100 though. I'm okay. I mean, we don't love seeing it drop, but as long as it stays above 100, if we drop below 100, I think that's a little bit more significant. What else do we have this week? We have some Fed information, but primarily we're going to be looking at GDP to hope that it stays at 2.3 and maybe even upticks a point or a base 10%, 0.10%. And we are looking at PCE, it does have favorable projections, 2.8 to 2.6, 2.6 to 2.4. Core PCE was expected to tick up a titch, but overall, that's what we have. Yeah, I don't know. I wanted to trade. I was looking at trades, but I knew I wasn't going to do anything until towards the end of the day. As we come in here and look at, you can see we got this rally, and I'm thinking, all right, things are looking pretty good. As we get into the last hour, it starts to dip, and then we go down here. We're back up marginally, very, very marginally on the futures. I got to tell you, and I want to hear from anyone else in the room, this is the tariff news is the number one source of friction for me right now in trading. Agree or disagree? Are we making too much of it? I mean, you can see what happens. We thought we were going to get a little bit of an upswing, and then it's all the way back down here. Right? Let's go through now. Vladimir said, let's look at the trades that we had. So Morgan Stanley, the problem here was, honestly, this was the break. I mean, it was too much. It was too much. We got the signal here. So let me pull up the alert. It'd be good to talk through this one. Bullish. There it is. So on 214 here, we get an alert. And then you'll notice 215, we got a little bit of movement. 216, it's going a little sideways. So 2 days in, and we caught a little piece, and then what? Well, now we started with a stop loss down at 136.35, which would have been in here, right? Below this level on this day. And in fact, I believe I might have even used the Heikin Ashi. Nope, the Heikin Ashi. The low here was 136.45, 10 cents below that. Then the next day, what could I do? I could move my stop to 137.55. And then the next day, I could move my stop to 138.65. And so by that point, at 138.65, I'm not back to break even, but I'm not that far away. And so if you move your stop up, then on this day, it opened flat and then just, even if you had your stop down here, should have stopped out there, possibly a moved stop. But once this day finished, you can see we took out these lows and then lower and then lower. Yeah, there's just not much we can do with it at this point. I would imagine there's not much left. So at this point, I mean, I've had times where I stayed in a trade and then all of a sudden it had a miraculous recovery. Would I expect it to happen? No, but could it? Sure. What I would say is let's emphasize exits. I'm not going to give ongoing, right? Because I believe it creates a crutch. If I'm like, oh, and now we do this and now we do this. And it's like, if you saw it late and then it was back up and you're like, well, wait, now should I still, right? There's no way to really provide great ongoing. So my objective with our alerts very, very deliberately is everything in the beginning. Because once it's like a shotgun. We all start at the same place and then we just spread out. That's how every trade works. That's always how it's going to be. Someone's going to stay longer. Someone's going to get out sooner. Someone's going to sell half. Someone's going to pair down when they're wrong, pair when they're right. And there's so many different ways to manage the trade, which is why I want to emphasize, hey, I have a range of a stop. Could be anywhere here tight or anywhere down underneath these lows. Preference. Some people really don't like tight stops and they put it down here. They're going to have a smaller position. Some people really like better reward to risk and put it up here. There's not like this is wrong and this is right. There's just different. It's different. We're all going to find our way to those subtle details, and the devil is definitely in the details when it comes to this. So I give you the range here. I give you a entry range. I give you a primary target. I give you a potential take profit target where I say, hey, where are these levels where I might be taking some here, taking some there? I give you time and trade. Now, this trade was a 6-to-1 potential. It didn't work. Lost money. Didn't need to lose more than maybe 20 to 30% of max. So if you're willing to lose 100, you probably could have stopped out and only lost $20-$30 per contract. So if you did 3 or 4, you're 100, 120 down instead of 400 down, something along those lines. Where can we get back in after being stopped out? Well, I guess the question would be, do you want to yet? Remember, we characterized that we believe Financials and industrials are a little iffy now, right? And at this point, you can see we took out all of these lows. Now it's back to this old low in this area, around this 130 zone. If you're okay with, if you're saying, hey, you know what, this longer term is still intact, so I'm still feeling like this is a viable place to try to catch something. Okay. It's the same thing we're always looking for at that point. Then I'm looking for, I don't have drawing tools. I need drawing tools. Let me get some. Lost 120. Craig, how many contracts? Was it 3 or 4-ish? Somewhere in that zone? 2, 3, 4, somewhere? 2. Okay, so a little more than I maybe would have thought. But I love that comment. Took it as a win with what happened the following days. Followed the plan, right? Followed the plan, kept the loss small. Could have been worse, kept it small. That is a win. That's a win. I mean, you lost money, but it's a win for a trade because it's a small loss. I believe that. Yeah, very cool. I appreciate you saying that because I think that has to be, the perspective. Okay. I was going to move my stop down because of the down day. Glenn coaching said, don't move it. Love it. Way to go, Glenn. Remember, now here's the deal, because we say that, don't move your stop. However, the one place that I do take my stop off is on the open. If I had wouldn't have mattered here, right? Here it opened and then it fell. What I'm really trying to avoid is times when it gaps down and it's going to gap through my stop. And this is a hard one for people to accept, but I've seen it real time in my own trading, both on the wrong end, on the right end. Even if you stop out 20 minutes later and the market's lower than it was when it opened, you'll still get a better price. Stopping, which means taking a market order on the open when the market opens, is basically just begging the market makers to take advantage of you. There's no easy way to put it. It is what it is. So I won't say never, because I will move my stop off, wait for the first 20 minutes. And then if it's lower, I'll work my way out with limits. If it's back up, I'll put my stop below the low of the open and I'll say, all right, let's let it ride and let's see what happens. It's worked out great. It's a great way to avoid really getting smashed on gaps, especially for options. So that's Morgan Stanley. Let's just make sure we do use stops. And if you're not using stops, you got to have triggers. And you might be thinking, what are you talking about, Scott? What do you mean trigger? Let me show you what I mean by trigger. So if I go to Market Watch, or not trigger, alerts, sorry. If I go to alerts here, I can come in and I can say, send me a notification, whether it's text, email, a ping, if I'm on the app. So if I was going to stop out at 153.25, I'll probably put it a little above that. I'll probably be like, hey, if it gets to 153.50, send me a notification so I can go watch it as it gets closer to the level. So we don't want things to just cross through our stops without any understanding that it's happened. I do like automated stops. I do like to say, hey, look, here's my line in the sand. If it crosses it, I'm out. I won't let it cross on the open, but other than that, not a lot of restrictions. Okay. Questions, comments, concerns? Where do we get back in? I don't know, Steven. What's your thought on an entry? Do you think there's something setting up here? As you see 3 red candles, good chunky red candles on 3 above average volume days. I'm concerned. I'm concerned about financials. If I have time, would love another price slices. Oh God, yes, the slices. How much merit do you put on that part of analyzing any given trade? A lot, right? It's giving you at least a North Star to start the trade, where you're like, here's where I think it's going to go. Here's where I think I'm wrong. Here's how long I think it's going to take. Here's how much I make if it gets there. Here's how much I lose if I'm wrong. Here's how much I lose for time. And if I do that with one contract, I can then say, well, I can then do 3, 4, 5 based on position sizing. I mean, I won't trade without having gone through that so that I at least have an idea. I mean, do I have any stats that are like, well, 70% of the time? God, I would say less than 30. Like, I mean, it's just, once it takes off, you're just, you're on the bucking bronco, man. I'm sure it's like Mike Tyson said, everybody has a plan until they get punched in the face. It's like, whoa, it's like, we got to start with something, because once you're in, shit just goes crazy and you're like, all right, let's go. Having trouble figuring it out. I get it. And that's not because you're a newbie. That's just because it's trading. That's why we try to do whatever we can do proactively, where we're like, I have a stop, I have a target, I have a few ideas. I tell people I like 5. I don't program 5 into the slices, but I like 5 ideas of what might happen. I tell people all the time, if you want to be right, have more than one idea of what might take place. Because if all I do is say, oh, I think it might go from here to here, what if it doesn't? You think it's going from A to E. What if it goes from A to C? If you're so focused on A that you just, you piss it away when it drops? No. Right? And so when I think of a trade, I think, what if I'm right? What if I'm kind of right? What if it doesn't move? It grinds sideways. Time decay can be bad there. What if I'm kind of wrong? Kind of wrong meaning, hey, it's gone against me, but not so much that I need to exit. Let's see what happens here, especially based on market conditions. And then what if I'm wrong? So 5. My reward to risk is based off of what if I'm right and what if I'm wrong. My trade management is based off of what if I'm kind of right, what if I'm kind of wrong, where I look to make adjustments and take some and keep some and tighten stops. And at the end of the day, just when you think you've figured it out, get a new president and market conditions change, right? You see, I mean, whatever it might be, you could go back and trace different things, whether it's inflation, recession, Brexit, COVID, new, right? I mean, things that change the market, and then you adjust and then it changes. Hence our philosophy, so eloquently given to us by the late, great Bruce Lee. Be water, my friends. Adapt. Yeah, sometimes you're doing your stops perfectly, and then you're like, oh, shoot, they're too tight. And you start to loosen it up. And then you're like, oh, they're too loose. And then I read a stat, and then I'm going to go to look at the other trade. I read a stat one time that said that a space shuttle in space is off course 90% of the time. I'm thinking, what? 90%? There's like 85 people in Houston, right? 85 people in Houston checking for problems. But then you start thinking about it. Well, you're in space, no gravity, no, right? And so you're kind of pointing towards, let's say you're going to the moon. You're pointing towards the moon and you start to drift. So what do? You hit your thruster to the left and you go, and then you're pointing at the moon for 1 second and then it drifts too far. And then you go back to the right and you go back to the left. And you're like, oh, so you're kind of weaving. And then you're like, well, wait a second. If I'm on a freeway and it's perfectly straight, is my hand just perfectly still on the wheel? Of course not. Little left, little right, little left, little right. Accounting for travel in the steering pin, inefficiencies in the road, right? I mean, any number of things. It's not really that straight like you think it is. So we're constantly making these little adjustments. That's it. That's trading. That's what we're going to do. Expect it. Expect that you're going to be doing a little bit more, a little bit less, a little bit more, with a lot of different things, right? These spectrums that we work off of. So for me, it gives me a process that supersedes conditions, because the process is going to take account for that. It's going to say, hey, you know what? We're in a better market, so I can set my stop a little tighter. I can let it go against me without whatever it may be, like whatever the if-then statements you have are moving you towards that help you to manage the trade. And so right now, the context is, it's a little iffier. Stephen made a point. He said, looking at our sectors, financials have fallen, right? Financials have fallen, industrials have fallen, technology staying pretty good, communication services staying pretty good, consumer discretionary, but already we're like, hey, that's less. It's less bullish. When we look at the market, and yes, my answer is yes, we can go do some slices. I'll try to do some today, just because. When we go look at the market, whoops. And again, let's orient ourselves to what? This was election, the day after the election. So at this point, we are literally less than 1% above where we were the day after the election. When you look at where we were 3 days after the election, we're now lower than that point in November. Then we orient ourselves around Inauguration Day, which is here. Okay? And at the end of Inauguration Day, we were at 603. And at the end of today, we're at 597. We're 1% below where we were on Inauguration Day, over a month later. So we have to acknowledge, what are the factors playing into it? Well, there's a lot going on politically, that, right? A lot of confusion. If you guys remember, there was the whole millions of people over 100 years old taking Social Security. I want you to remember, I said, no, there's not. That's just not true. There's not. And turns out there's not. Right? And so this misinformation is just, it's tough. It's tough for the market. So hopefully we can adapt soon. But I'll tell you right now, my MO at this point remains cautious. I'm cautious. Let's go look at the other one, and then we'll look through some trades and see if we can't find something that at least gives us something we can play with. Roblox. And Roblox is sneaky. It wasn't as bad, right? I mean, it's like, here you could be like, oh, it ended up with a hammer. And it's just like, you can justify your way into trades and staying into trades. And then all of a sudden you're like, well, it's just a little candle. And the next day it's just a little candle. And then all of a sudden you're like, oh, crap. Where was I supposed to exit this trade? Well, let's go find out. Stop it. Somewhere between 64.25. That's here. We got the signal here on the 14th. We're like, hey, this thing's going to go. The next day got really close to us, right? Might actually hit that. If you were all the way up at 65 at the top end of it. Oh no, 65.25. Sorry, 65.25. I was like, no, I don't remember getting stopped out until the next day. Yeah, this day stopped me out. This day I actually held in. It came back and I'm like, hey, you know what? This looks okay. We might be fine here. And then it rolled. Look at what happened. I want you to notice what happened here. We had a big red candle here. We had a cross down here. We took out, right? Remember that what we did was, started with a stop loss through here. And you can see that day it would have pinged it. And then the next day a little bit lower. And then a little lower, and then a little lower still. And it's just like, it looks like it could stabilize. To me, I'm like, oh yeah, it looks like it could. So am I going to trade that? Hell no. Because what does it looks like it could mean to me? It means nothing. Anything could do anything. I need way more than that. So I want you guys to think if you ended up in any of these trades too long. A couple of things. Number one, we've all done it. We all still do it. Number two, learn from it. What's the adjustment? Right? We need to learn from it. Number three, let me go back to my. I might have been missing some comments coming through here. So sorry. Hold on one second. No, I didn't miss anything. Yeah. So at this point, there's nothing we can do with this. But now this one, if you did happen to stay in this one, I would say this feels a little better. You can see at least the stochastics is turning. It held this support level. We're not too far below. I actually think this could get back. So what do we have? These until March? I mean, if the market definitely. So here's the deal. We dropped 3/4 of a point, but we stayed at a 4. So I still have hope that we could pop out of this. I mean, obviously, my perspective on the political climate is eroding that hope quickly. So what does that mean to us? Well, I mean, look, if this thing flips during the week from a time when we thought it could hold to a time when sellers come in, we've already acknowledged that we're in a situation where we're more inclined to speculate bearishly as we start dropping if we start dropping below 4. Yeah, we'd be looking for that. Let me know if anyone has any questions about either of those two trades. Otherwise, let's just pop back in now. And see what we have developing. I don't know what happened. And some people's still works. I'm going to put this out there. It used to be on mine that when I put my mouse and I click on my watch list and then I start using the arrow keys, it would go down. And my arrow keys don't work now. Does anybody else have that problem? It makes me so mad because I like to go in and then just like click, 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 click. Now I have to use the mouse. It's such a pain. I'm going to go see if anyone else has had that issue. No one's mentioned it. It may just be me. It very well may just be me. And if that's the case, there's not much you can do about it. All right. Let's go through the watch list. AppLovin. That's still a maybe. I'd still look to take that potentially. We said, hey, if this thing comes back and Doji's, maybe. Baba, nope. Too much selling. Bank of America, nope. BX, nope. Caterpillar, nope. Sienna, that was one that we were like, maybe if it can hold above the 50. What does that mean? Nope. Nope. You can see the selling is picking up. That's what Vladimir is talking about, turning bearish. The volume picking up. CME. Yeah, I'd still actually consider this one viable. It's a strong stock, nice trend. That's a maybe. Cisco still setting up for me. Oh, yeah. Anywhere above 62, I still like it. That looks fine. Delta, no. Diamonds, no. Duke, Stalin. Fastenal, no. FHN, I had that as a maybe. Yeah, I mean, if it can hold up, but everything's kind of pushing. Flex is now a no. I will be removing these drawings. Let's see here. Okay, let's see. Fox actually looks strong, but is overextended right now. GBTC. Nothing there. I gotta tell you, I'm not feeling great. Look at GE Vernova crashing down. A lot of things rolling over. Gold's pushing higher. Google pushing down. Goldman, I kind of like Goldman. Hey, if anything can help push us out of financials, Goldman, Visa staying strong, pulling things with it. Okay, maybe. Hood, nothing. HTHT, I still like it. I think there's potential there. I'm going to come back. I like Howmet, or HTHT. We're going to come back to that one. To the other question about some slices. Howmet looks pretty good still. IBM on a pullback I like just fine. Maybe IP. I like Coca-Cola. I like MasterCard. We have plenty of things still tradable. I don't love MasterCard crashing this hard, but if it can stabilize, I think it's got something for us. NDAQ, no. Netflix, still a yes for me, but got to stop soon. NVIDIA, no. Earnings, PLTR got beat up pretty good today. Yeah, there's really not much else. Okay, so we don't have a lot. I mean, it's not like we're clamoring to put on a new bullish trade, right? If it makes sense, we would do it. If the market can start to stabilize, then maybe it makes sense tomorrow. Otherwise, I'm not. It's not looking fantastic. We're really starting to see more and more weakness coming into this thing. Steven said, I had my posture at 375 and was looking for some bearish trades. Haven't found anything. And that's because right now everything is oversold. Right? If I'm gonna, let me go to Tesla. If there was something that maybe was, that was it. But not today. Like in here. What do I mean by that? Down, up, turns. And then we get this. Up, turns. And then we get possibly this. So if you're looking for something bearish, you're looking for this. Overbought and rolling over. Crossing to the downside, giving you potential like this. With a stop up. It's everything in reverse. Just take a bullish trade and flip it over. That's what we're doing. Which means that we don't want it down in this range. We want it up in this range, right? Up here, rolling over. So I'm not surprised that you're not finding anything. I'm not shocked by that at all. Okay, let's do some quick slices. And then we'll see where that puts us. So let's go back to HTHT. Okay, so let's just say we thought this thing had done something like this. And we're like, oh, look at that. We're so excited because it is turning. And we're like, that's our trade right there. What do I need to do? I need a stop. So I'm going to say, oh, my stop's going to be down here. So I have risk. And a target. So I'm going to say, oh, you know what? I think this thing could maybe make a run back up to 40, maybe even 41, somewhere in there to replicate this move a second time. So now I'm starting to create a number here, and we'll call this 3475. I've got a number down here. 3475. Now remember, if it was 3475, we wouldn't be getting in, except if the stock were actually at 36. So then all of a sudden you've got some numbers here, right? Now this isn't going to work very well for me. I'm going to have to just sort of abandon this whole analysis and then go play with the slices, Because if you don't have an actual like setup, we're doing too much what if on top of what if. Right now, my what if is what if I'm right, what if I'm wrong. But it's hard to do. What if it takes $1 and then I get in and then it goes up and you do have the ability to model that, but it's complex. Okay, so what would we do instead? I've got 41 here. I've got 34.75 here. 36. That would mean I'm going to get 5 to the upside, $1.25 to the downside, and now I have 4-1, basically, right? So the crux of the Analyze tab is the pre-trade analysis, that then you bring this number with you, this number with you, and then also from here to here, this number with you, 9 days or whatever it is, right? So I've got all of those things. Okay, now we go into the Analyze tab. And I'm going to give myself that same $1.25 to the downside, $5 to the upside, which would be 40.38 if I was right. Okay. 40.38. If I'm wrong, I lose $1.25, so that's 30.59. No. What are you talking about, Scott? $1.25, 34.13. What the hell's wrong with me? Okay. So that would be, those aren't the numbers that we had, because we had 41, right? But what this is reflective of the same core analysis, right? That's what we were looking to model, was that analysis. So if I have this and I take my time and I'm going to go out a week at least, which takes me to the next month. We'll go here. Okay, now what? A couple of things. Number one, I don't love the options. There's only 4 months worth of options. We don't even have 6 months of options, let alone weekly options. So we added this recently, but without even opening the option strikes to see what the volume and open interest looks like, I'm suspicious that it has illiquid options, which is going to make it very difficult for us to want to trade this. But let's go take a peek. And you can see we've got hundreds, which if I had weekly contracts would be great. That would mean I have weeklies at hundreds and my standard contracts have thousands of contracts. It's not what that means. What's the problem here? The problem here is, and you can see that the spread is not outrageous between bid and ask, 20 cents between bid and ask. But then it goes to 40 cents and then it goes to like $4. So if you look up here, in the money options have terrible spreads. Yeah, I'd be reluctant. I mean, you could maybe buy a 40 as an all or nothing, where it's like, hey, I could put 60 cents in this thing, and if it caught the move I was looking for and it happened quickly, I'd maybe do okay with it. Let's see if that's the case. Well, you can see, I can still get close to 4-1, right? Close to 4-1. How do I know that? Well, I've got $400 of risk if I'm wrong, and I've got $1,540 of reward if I'm right. So it's right in that vein-ish. If I try this contract, what do I have? I have 1,000 to 3,500, so I'm only 3.5 to 1. So that's a little better, but I got to tell you guys, this would make me reluctant to want to do the option. I would either consider the stock and just use leverage, or excuse me, just use possible margin leverage to get 2-to-1 leverage. It's not 8-to-1 leverage like I'd get with an option probably, but it's some leverage. I should still be able to do it, or not take the trade. But you can see, what am I going to do with this? I put my target and I lock it. Lock the target, lock the stop, lock the time, and then we have the ability to assess reward to risk ratio. Now, I would also tell you, keep using this as the trade evolves, right? What does that mean? It means that as the stock goes up or down, I might be like, hey, if this were to go, let's say this goes up to 39. Nope, that's too far. We'll call it 37. I've got a few $100, $700. Am I willing to let it go from 700 gain back to a $1,000 loss? Of course not. No way, right? No way. I have to manage my trade better than that. If this thing turns around and starts to go up and gets to 37 from where we entered the trade, I lost my drawing tools. Where did you go? So it gave us this signal here, right? And then it makes this move to this area. I still have my stop down here and my target here. That's almost 1-to-1 now. I can't let that happen. How do I avoid that? I would say, well, since this thing has moved up, let's move our stop from here to here. And now I'm not risking that much. Now, all of a sudden, if it drops, I might make $150, $200. But I still have all the opportunity for it to get up to here. And my ability to quantify those numbers, I can test with my what if. What if it goes, right? What if when this went to 37, I adjusted this to 35.50? Well, I went from $1,000 of risk to $260 of risk. That's a victory. That's a victory. And so that's what I'm doing with my slices. It's just sort of my what if analysis. Okay. Good day. I mean, all things considered, right? There's only so much we can do based on market conditions right now. All we can do is hope that the conditions stabilize, or look, let's get ready for whatever comes next. So if our posture stays where it is, we may start looking at some other strategies just to get us through in the short term. I'm not going to lose hope. We still have the long-term trend intact, short-term trend intact. VIX is still intact. There's plenty of things that still present a favorable narrative for the market. So, don't abandon hope just yet, but let's be realistic and see what happens this week. Beautiful, Craig. I'm glad we could hit it for you today. I'm glad that we got that taken care of. Everybody else, it's great to see you. One person asks a question, everybody learns. Let's keep it up. I'll be back tomorrow night. Glenn will be back at 7:30. I'll be back at 8:30. We'll see what the market does. We'll process it. I'm going to run some searches tomorrow, consumer staples particularly. We'll see what happens. All right, everybody. Thanks. I appreciate your your patience as we had a couple of technical snafus. I now know to get my schedule updated and the room set back to my Zoom link, so I will make that happen. Have a great rest of your night. As always, happy trading.